so much to talk about, and there usually is.
Yeah.
But this past week, on Friday morning, we got a PCE report. There's this whole shutdown countdown that's getting everybody excited. And there's some company news that we're going to try to cover in just a couple of minutes here. But let's start probably to me, which is the most economic news, which was the PCE indicator that we got on Friday morning.
Yeah, the Personal Consumption Expenditure Index. So this is a measure of every spending that consumers do. So it's very broad-based. And for August, it showed an improvement, an acceleration of spending. And it's raised the question, I think, in a lot of people's mind about whether or not some of the labor market data, all the angst over the job market slowing, is that real or not? Because the GDP numbers that we got for the second quarter, so gross domestic product, very broad-based, that was revised higher to 3.8% annualized, which is pretty strong. Now, this PCE, consumer spending, that was also strong. Yet in the context of that price index, so when we look at inflation, it's often the consumer price index because that comes out earlier in the month.
Yeah.
But the Federal Reserve, they target this personal consumption expenditure deflator.
All right, so there's a lot there. So
Yeah.
let me try to explain some of that, right? So one, GDP, the economy is doing well. And generally you lower interest rates when the economy is starting to slow. Well, we're showing that GDP is up,
Yep.
right? Well, so that's just something they're looking at. In the same time, they want inflation to come down, target at 2%. And I'm not sure if they didn't move the goalposts, almost 3%. So they have these two numbers that are going against what they said when they started to lower interest rates. And so it's going to be a bumpy ride. It's similar to when people invest. It's not a straight line up. It's here and there and everywhere before it starts to move forward. So the Fed is in a predicament, in my opinion, and so we'll see all of this data, what they do with it, and how they translate it.
I think that's absolutely right. So this past week, we also heard from a lot of Fed officials. So they go into what's called a quiet period before the announcement
I wish they
comes
had
out.
more of that, to be
That's
honest
right.
with
Yeah,
you.
maybe they should extend that on both sides.
Did you ever play the
of
quiet
meeting.
game with your kids?
Yes.
Dave is undefeated.
Exactly.
Well,
Don't make me pull this car over.
That's right. Well, I think I was the first to giggle when I was playing that with CJ when he was little. But I'm paid to talk, right?
Yeah, exactly.
But in terms of the messaging, it was really all over the place. We do know that Governor Myron, Governor Bowman, Governor Waller,
Fed governors,
three of them, that they're supportive of cutting rates. The rest of them, a little bit more wishy-washy. Yep. Some of them say, hey, let's make it one and done. Others are saying, well, let's just kind of go at a gradual pace. Interesting that you brought up the idea of the target. So at the Federal Reserve Bank of Atlanta, Bostic, he said, maybe we should specify a range instead of a specific number. So that could be on the table at some point, obviously.
That's
officially.
the goalpost moving I was talking about.
That's right. Or widen the goalpost, right? You don't have to move it back or forward. Just
Unlike
make it wider.
the NFL, they tightened it up a little bit,
That's right.
Yeah, so that's really good. And then the other really big piece of news that I saw, at least economically, what is happening with new home sales, a shocking number.
That's right. It was a huge jump. So a 20% increase month on month. Now, keep in mind, these numbers, they can be revised. It probably will be. But 800,000 new home sales, that's an annualized pace.
Yeah.
Okay, so basically you divide that by 12 because that's what it is per month.
So a good month.
But it was a really good month. Yeah. And part of that was people realizing that if they buy a home now, even though rates are higher, prices have come down. So your average home price has come down about 5% from a year ago. Rates might be high, but around 6.5%. The broader historical context, really not that high. It's just high relative to what we had become accustomed to.
Zero interest rates.
That's right. And plus, you can always refinance, right? If you can afford it now.
So prices have come down and interest rates have come down, and that was a little bit of kerosene to get this thing going.
Exactly. And that's probably why the National Association of Home Builders last week was saying that even though sentiment is fairly low right now because of current conditions, there is optimism that if we do see rates stabilize or move lower, that could light a fire under the housing market.
And the stocks reacted positively when they saw that information, right? So we'll have to watch that. And the last thing we have to talk about is the way Danny set up the show, which is shutdown, countdown. We're going to spend a lot of time talking about it, but from 30,000 feet.
The fiscal year for the federal government, it ends at the midnight on September 30th. So you can think about Wednesday, October 1st is the possibility that there will be a government shutdown if they haven't actually passed a bunch of these spending bills. There, 3 of them are tied up in reconciliation. There's another 9 that they haven't even really started on. So it's looking kind of likely that there will be this government shutdown, but we'll get into exactly what that might and might not mean.
And if people freak out or shouldn't freak out, if they're going to get paid, if they're not going to get paid, if they're going to be able to get to the museum or not.